What is going on, Alpha Hunters? It is a very wonderful Hump Day Wednesday today. And we got some things actually moving today. Man, yesterday was really boring. Up until that last, 30 minutes. I kind of called that one, right? Anyways, if you take away the last 30 minutes of yesterday, the first 30 minutes of today, we're basically just below where we traded for most of the day yesterday. Just kind of looking at that. So I know there's a lot of there's a pretty good bullish pop there today. Quite a bit of it was because we sold down so hard in the last 30 minutes yesterday, and we gapped up here. Oh, roughly 0.6% of a gap up there, and then first 30 minutes, nice little pullback, and then not much. I mean, it's just we just kind of chop sideways for about 2 hours. Nice little bullish move there for about 30 minutes. And, it kind of looks like we're doing a little double top rollover action here. I mean, we'll see. Definitely go either way. But, it's just kind of interesting. I mean, I get the market's up, but if you look at the market between kind of like midpoint yesterday, midpoint today, we're not. So it's kind of an interesting feel to the market today, even though we did gap up pretty good. All right, so the SPY's currently up 0.25%. Q's actually got hit pretty sharp there on the open. Hasn't really left the lower ends of the day. Currently about flat, even on the day. You see that they rolled over pretty hard there in that last hour there for the Q's yesterday. Q's first 30 minutes though got hit pretty hard today. IWM looking really strong. Does not look like it's sold off much. I mean, a little bit of bearishness to the first 30 minutes. But after that, you see a nice strong trend higher throughout the day. And they did get hit a little bit there in the last hour yesterday as well. The DIA, got hit a little bit in the last hour yesterday. Nice gap up here on the DIA, currently up 0.6%. If I didn't say it, IWM's up 1.5%. So that's, IWM's doing pretty good today. The DIA is just kind of doing its thing. RSP up 0.9%, looking pretty good there. Nice gap up here, about 0.6% of a gap up there on the RSP. Nice pop there in the first 10 minutes. Hasn't really gone anywhere since. So, the RSP not looking too bad. And it kind of makes sense, I guess. Kind of pulled into the moving averages. But nice gap up across much of the market. DIA all looking pretty good. IWM looking pretty good. Okay. The Qs are the ones that, man, they have really stalled out here. Outside of a couple days of bullishness last week, the Qs really just not doing it all that well, not leading the market. And I get it. Bulls are like, yay, market's broadening out, see? But yet, I'm going to say it again. They said it last year. Everything's priced correctly except for tech. Tech's the area you want to be in. Well, if everything's priced correctly, then do you really want to see the market broaden out? And I guess that's going to be the question. That is going to be the question. We'll find out when we get into earnings season, which is coming up in 2 weeks. It should be starting in 2 weeks. Or the second week of April. Not next week, but the week after. So, we'll see. It's not like earnings this past go-around were all that fantastic. It was for a couple semiconductor names. Other than that, not too much. SPY. Yeah, just kind of doing its thing. It's going to have 5 days in a row where it ends red. Now, it's not down day over day. On my chart, it's red because it's down from the open. It indicates intraday selling. So, just kind of an interesting look there. So, possibly 5 days of intraday selling. Kind of looking back, last time we had 5 days of intraday selling in a row, it's been a while. So unless the market kind of gets on its horse, and we had multiple days kind of in a row here, but we had one day like kind of break up some of these red days, red consecutive days. Man, we have to go back several months. I mean, almost a year to see 5 red days in a row. So are we going to have a nice rally here to end the day? Possibly? Question mark? Question mark? Is this it? Is this when we... So this is when we got it. Back in December of 22, we had... Looks like we had 5 days selling in a row. 1, 2, 3, 4, 5. Yep, right here. Back in December, mid-December of 22. So that was the last time we had 5 closes below the open on the SPY. So that just kind of tells you really kind of the state that we've been in for a while. And, you know, we had another one here then in October, also one here at the end of September. Yeah, also another one here in June. Kind of curious. Definitely did have one here in January of that year of 22. So, yeah, I mean, it happens. It didn't look like it happened at all in 2023. So, okay. It's been a while. So, not really say that's just going to say anything since we're so close to all-time highs. I mean, we could just be, you know, kind of what the market's been doing is gapping up and selling down like every day, except for, I guess, Friday and Monday. So, anyways, just kind of interesting looking along the market. VIX. Let's see, VIX kind of just hanging out, not really doing a whole lot. It's dropping a little bit. Dollar showing some strength following yesterday's lower wick hammer. Okay, looking pretty good. Gold, GLD Trust. Yeah, I mean, it's up a little bit, up about 0.5%. Dollar's up a little bit. It's kind of what I mentioned. Like sometimes you get those periods of times where gold and dollar will both wind up being bullish. Well, you know, yields also play into the gold area. Just more of a stronger correlation or an inverse correlation is really the gold dollar relationship. But yeah, gold's up pretty good here. Speaking of those yields, so we got that breakdown and kind of mentioned this on Monday when we were getting a nice bounce back, but I was like, Tuesday, you want to see the continuation. We were getting the bounce. We want to see that continuation. Well, we didn't. We tried to continue, but then, you know, just wound up fading. It didn't hold. You know, here's a look at that hourly, right? We didn't hold. We want to fade back down. It's okay. It is what it is. It doesn't mean the yields are going to drop off. It doesn't mean they're going to come down, snag Monday's low, and then bounce. It just means that, you know, they might continue lower. Okay, it doesn't mean they're going to crash or anything like that. We might just sit into a basing pattern here for the next few weeks. Kind of just come down, roll higher. It just kind of depends, you know, what this would kind of look like. But as for now, you're probably just not looking to be bullish on yields. So you're probably just looking to be bullish on bonds. So I'll take a look at bonds in a sec. Anyways, 10-2 inversion. Yep. Just kind of hanging out, not really doing a whole lot. From what I know, actually, let's just go and take a look at yields a little bit closer. So let's take a look at the long term. And from what I saw this morning, the shorter term was really dropping off, and we just kind of looked at that, you know, 10-2 inversion. That would kind of a little bit more confirm, I believe, what I saw this morning. Was that, yeah, the shorter term tips were really dropping off. So you can see that even the 30 years dropping off. But until we break this uptrending support line, I wasn't really too much worried about it. We might just get in here, chop around for the next couple weeks. But if we break that uptrending line, then probably going to be game on for yields to continue to drop maybe kind of hard. We'll see. So here's a look at the shorter term 2-year. So the 2-year dropping, not as hard. We'll take a look at the 6-month also, but you can see this, the 2-year not dropping as hard as the longer terms, which is kind of interesting. So 6-month, there we go. So here's a look at the 6-month, and they're actually holding steady. So I don't know what I was seeing this morning that they said tip yields were dropping off. So I don't know what I saw that headline, but I would not get that impression off of what we were just looking at. I would say the longer terms are dropping off, and the tips are usually the shorter term, usually 6 months and less, and bonds are usually like 2 years and longer for the government debt stuff. I forget the exact breakdown, but we can definitely take a look at that. Anyways, sideways HYG channel still in effect. It's looking pretty good to maybe be breaking bullish out of here. Looking pretty good. Up a 30% there on the HYG. Starting to get to that upper ends there. LQD, yeah, also doesn't look too bad. If it breaks above this high that we put in back in beginning of March, that would look pretty good. Continue bullish. TLT is kind of just, well, broke last week's high at least. It doesn't matter. It needs to break this downtrending level, which is kind of correlates with that 30-year upward trending support line. So until those happen, I don't really know how much I would want to be bullish on TLT or bearish on bonds, kind of say. So until we break this downtrending line or the rising line on that 30-year that we're looking at, this line, I wouldn't want to play that, right? I would just say, hey, if you're going to consolidate in here, okay, fine, consolidate, and then I'll see what happens later. But yeah, I mean, it could continue just to, shop sideways. We'll see what happens later on. All right, so then taking a look at sector rotation for the day. Yeah, we know got that quick sell down yesterday, so we got a pretty large gap up today, especially on the SPY. Qs as well. And yeah, I mean, we got some movement today. Things that are underperforming. Tech communication sectors, okay. Underperforming the most. Energies, financials outperforming. Staples are outperforming. Discretionaries doing pretty good. Healthcare, industrials, materials doing pretty good. Materials are even up 1%. Wow, that's crazy. But look at what's doing really good today. Real estate and utilities. Why are utilities up 2%? That's interesting. I mean, yeah, that's really interesting. Wow. You would think that we would be seeing a lot of bearishness, or maybe there's a lot of people rolling into protection positions with how much utilities are performing very well today. Wow, that's interesting. If you take out the gap, let's see, tech communications, yeah, they've definitely gotten hit pretty hard during the day. So tech communications still at the lower end of the day. Financials also underperforming intraday. Healthcare is kind of in line with the market. Staples, a little bit outperformance there. Industrials, energies, not healthcare, discretionary is a little bit outperformance there. Materials, real estate outperforming pretty good on the day. And then, yeah, utilities. I mean, you see pretty good flows throughout the day into utilities. So very, very interesting kind of price action there coming in on the utility side.